Okay, guys, welcome again to another live stream. Today, I will be talking a bit more about one of the strategies I use, which is the breakout and breakdown strategy. It's really a simple strategy, I find myself. So I will just take you guys through how I use this and maybe how you could implement this or learn from this and try to use it on your own. So what is actually a breakout and a breakdown strategy? Well, in simple terms, it's just entering a trade after a confirmed breakout or breakdown of a trend line, and then you enter on the retest of that trend line. So what would you need for this strategy? So what do I use? Of course, as we're talking about breakouts and breakdowns, we would need a trend line or patterns. We would be looking for confirmed breakouts and breakdowns. I usually use the 50 and the 100 EMA for confirmation and confluence. Also the RSI, which should be crossing bullish or bearish. And you can use volume to confirm also the breakout is a real breakout and not a deviation. So yeah, trend lines, patterns. I think everybody in here knows this sheet where you can see all the kinds of patterns there are. You can use that for looking at patterns in the on the chart and looking for breakouts or breakdowns from that pattern. But you can also use this strategy just with one trend line, and I will give you guys some examples later on. So about what is a breakout or a breakdown, I started using those words. You could say breakout is always crossing a trend line, but I tend to use a breakout when we're moving up, so that's bullish, and a breakdown when we're moving down, so that's bearish. So you would long a breakout and short a breakdown. So I'll give you an example of what a breakout and a breakdown should look like. So let's say you have a trend line with price hovering above, so price is moving there, and this trend line obviously should have impact points, a minimum of 3. So what should a breakdown look like? It would look like this. So you would want to see price move down through the trend line, which means it is a breakout. Then you want to see a confirmation close below the trend line, and then you want to see a retest. And a retest, that's the point where we would be entering a trade. So most of the times you would see call that a bearish retest of the trend line, and then you will see continuation down. This also goes, of course, for a breakout to the upside. So let's say you have a trend line with price making higher lows, like here, and it would be making a higher low here, and you have 3 impact points. Then this would be a trend line to watch for a breakout. So then you would be waiting, in this case, again for price moving above the trend line, because if you're looking for a breakout, I'm assuming you know that price is moving below the trend line and then comes at a point that it breaks out. So it moves up through the trend line, it confirms a breakout above, then retests the trend line, and also in this case the retest is the point where you should go long. Best cases are the EMA 50 and 100 you use for confluence. I use them in this way that if you want to go long, you should always make sure that the EMA is below price. So if price is breaking out, you want to be the EMA 50 and 100. You want them to be below the price because they will act as support. And for shorting, you want to be the EMA be above the price action. So maybe breaking through the EMAs and then retesting. So the most perfect example is when EMA 50 and 100 should be also around the retest of the trend line. And also, like I said, I would be looking for an RSI crossing bullish or bearish, which means nothing more than, let's see where it is. There it is. What you will be looking for, or want to be looking for, is that if you are shorting, that there was also a bearish cross on the RSI, like here. You can see that the RSI is crossing bearish, so the black line in this case is crossing down the red one, which is the MA, moving average. And in case you want to go long, you want to see a move up, down, from down to up through also the red line in this case. So that's really short how this strategy works. The best way to show it you guys is just to give you some examples on the chart. So let's hide all this. I will usually trade this only on the 15-minute time frame, but you can use it also on the 1 hour or above. But for me, I find it working best on lower time frames, and in this case, usually the 15 minutes, because after a confirmed breakout or breakdown, you have to wait a couple of candles because you want the breakout to be confirmed. So, guys, if anyone has the mic on, please mute yourself. All right, Bitcoin. Let's see. I was looking at that. So, okay. I'm right now looking at the 15-minute time frame on Bitcoin. So what I would be doing is, like I said, you want either a trend line or a pattern, which also consists of trend lines. So this looks already like a breakout, so we can maybe move a little back, rewind the chart a bit to see how this could be working out. If we were earlier this morning, let's have a little bit of a replay here. All right, so let's say you would be looking at this chart. You can see a trend line forming here from the highs. So let's say you're watching this trend line. At this moment, you see price is moving below that line. You will add the EMA 50 and the EMA 100. So at this point in time, price was moving below, but the trend line is still above the EMAs. So it would just be a waiting game. And then you're gonna watch and keep watching until you eventually get a break. What you can do then, or what I do sometimes, is that you add an alert. You can add an alert on a trend line. Well, you can do that in replay mode. But you can add an alert on a trend line so you get a notification when it crosses. So then you just wait. You have your trend line here, and you will be waiting for a breakout because trend line is above the 50 and 100. It has multiple points where it rejected 1, 2, 3, 4, 5 points. So you could say if we break out this trend line, there should be some move up coming. So you will be waiting until you get a notification or you're watching the chart, and you will be looking for that breakout. Let's get a little bit back. Right. Okay. Now let me zoom in a bit for you guys. So this is the trend line we're talking about, and here you will get a notification because you see that it has touched or a little bit above, but then went below. But this point you're going to watch what it's going to do, because as you can see here on the RSI, you see a bullish cross. You see price RSI was moving below the red line and it crossed bullish, so could mean a move up coming. And also so you would be waiting. What you want to see is a confirmation candle. That's the first one you're looking for. A confirmation candle means a candle that actually goes through the trend line and closes above. So let's see if we're going to get that one. Look, this is a good one. Here you can see we have a confirmation candle. This confirms a breakout, or this is the breakout candle. Sorry, just rewind that a bit. This is the breakout candle and not the confirmation candle. The breakout candle is the one that is breaking out of the trend line. What you can do is you can check volume, because what you want to see is that volume is up when a breakout occurs, because if this stays flat, the breakout isn't that strong. But in this case you have a strong breakout, so that's kind of could be a good one to keep an eye on. So then we go to the next, and you wait one candle, and this second candle here is the confirmation candle. So you want this candle to close above the trend line. Well, in this case it did. So when you have had that confirmation candle, breakout candle, confirmation candle, that's a point where you can say, okay, this could be looking good for a possible long. So what I then do is I'm going to put on a long position or a pending order, but I'm first going to see, okay, where do I want to enter? So at first you will be looking at the retest of the trend line. That's always my point of entry, because usually after a breakout and a confirmation you would see a retest, in this case a bullish retest, and then continuation. So at this point I would be saying, okay, I want to look for an entry around this trend line. We have the 50 and 100 EMAs here. So then I'd be looking at where am I going to put my stop loss. You should always for this strategy put your stop loss below the 50 and 100 EMAs. And also best way to do this is to put your stop loss below the local or the previous swing low when you're going long. So I would say I put my stop loss here, because most of the times I wouldn't let stop loss hit, but if I get a close back below the trend line, that would invalidate the trade. So in this case we have our entry point. Then it's good to look for our possible take profit point, which can be a previous swing high, but that's already where it is. So you should be looking for the next swing high, or maybe even the local highs in this case. We're putting it there like 3400, which is also local resistance. Okay. So what you're doing now is that you're going to wait for your entry, and then you have to keep tabs on the trade, because even though this is a confirmation candle, you can still have a candle deviate back in because we're on lower time frames. So once you set your trade, you have to be wary of deviation still, and have to be watching your trade. So let's look at the next trades. You see that it's going down, going up, and in this case we will be missing our entry. As you can see, price never really got back to the trend line, so in this case we would have missed. But that's not a problem. That's not like I said, it's not a problem, because then you move on to the next. So as you can see, we had a small pullback, but it wasn't enough. It didn't retest the trend line completely. So in this case, you would say, if you have the fourth candle, which it was a big green candle, you could say, okay, trade ID is invalidated. I will cancel my trade and I will move on looking for the next. So that's one example. I'll have another example here of a possible breakdown. You already see I have the trend line here drawn on the 15 minutes. This is live price action. So as you can see, you have a trend line here. Let's have a replay to here. So this is another example, and this will be an example of a breakdown, sorry. So to the downside, which will result in a possible short trade. So as you can see, we have a trend line here. Also, the trend line has 1, 2, 3, 4 points of impact, which makes it a valid trend line. Price is kind of high here, but what you do then again is you set an alarm on the trend line like this, with this add alert line, and you will get a notification once price moves down through the trend line. And then again you just wait, and at this point you will have a notification saying we have a cross of the trend line. And again, the first candle is the breakdown candle, so you won't be doing anything yet. You will wait for the next candle, and as you can see, the next candle closed below the trend line, so this is your confirmation of the breakdown. And then you could say, okay, there will probably be, or there is a chance that there will be a retest of the trend line, and we have continuation down. So at this point you will be looking for your setup on the trade, and in this case the entry will be at a retest. Oh, this is a long position. Of course, it's a short one. You want to be entering on the retest, and you would hoping for continuation. The only downside to this is that the 200 EMA, it broke down here to fill this fill this trade, it has to move a bit back up or through the support or resistance the 200 EMA formed. So could be tricky. We have the 50 EMA here also, so you would look for a wider stop loss in this case, but above the 50 and above resistance, support resistance, which is here, this block. So let's say I would put my stop here, and I would have it take profit on the second low, which is here, which it gives us again a 1-to-2 ratio. Then again, I will be waiting and looking for a possible entry, and as you can see here, it took a while longer, so possibly I would have cancelled it, because you see probably on the 1 hour it's a better breakdown retest. As you can see, as time moves on, your entry, which was at first here, becomes a little lower. As you can see now, as you're looking at just the live price action, it did have a retest, bearish retest at the moment, but it's back above the 50 EMAs and back above the 200 EMAs. So if you are looking at price here, you want to be entering, you want to see a bearish retest quite soon. So let's say in the 5-6 next candle, so in the next hour, you would want to see the bearish retest if you're trading on a 50-minute time frames, or else your trade ID is invalidated. This still could be a bearish retest, and it could continue down, but not on the 50-minute. That would be if you would be on the 1 hour. All right. Here's another example. This one is for a break out above a trend line. As you can see, there's a trend line forming here. Let's rewind it a bit. So again, you can zoom out. You could say this is a bullish falling wedge. Sorry, here, this one from here to there. Use even that one. I don't like the lower trend line too much because we had 2 wicks, but we had 1, 2, 3, 4 points of impact. So could be a valid trend line, but what I'll be watching in this case is the upper trend line, which has 1, 2, 3, 4 taps, and I would be looking for a breakout. So I'd want to see move price up. So again, I will be putting notification, and I'll be waiting until I get a notification, and when I get that, I will be watching the chart for the next 3 candles. So let's see what it does, because we already know it's gonna break out. So let's see here. We had the first candle trying to break out. You would get a notification here. Now you will be watching the chart, because 2 things can happen. Of course, some people will say let's short it here because it's back at the trend line, and it's rejecting on the 50 minutes. But you gotta take into account that you have the 100 and the 50 EMAs here. But let's wait and let's see what the next candle does. And then the next candle, you see it's breaking out. In this case, I wouldn't be fully convinced because volume isn't that high. So the best breakouts or breakdowns are the one that goes along with a lot of volume, or more volume than the previous candles. But what you do see here is that there is a bullish cross on the RSI. So the next candle has lots of volume. So we have the breakout candle, then we have the confirmation candle closing and opening above the trend line, which gives us a signal to put on, oh, sorry, wrong button, to put on a long trade, in this case for the retest of the trend line. You want to again put your stop loss below the previous swing low, the local swing low, this one. So here, like around 1%, then you would definitely want more than 1 to 2 risk reward ratio. Remember, these are all 15-minute time frames trades, so usually they play out in a couple of hours. So you have to be on the charts, you have to be active and actively watching trades in case they deviate back down. It's okay, you've put on your entry point, and then you just wait to see if we get filled. And at this point, you see we had the retest of the trend line and our trade filled. So this was the retest candle, and then you will be watching here. Thing that is positive for this trade would be that the 50 EMA, the red line, is looking to cross the blue line, which is a bullish sign. So we watch the trade move on. You can see this could be a bit, well, it's not shocking, but you see after you've entered the trade, you made a little bit profits, you see a move down to really test the trend line. That could be, for some people, a reason to panic, but we always teach you guys, you don't have stop loss for nothing, so you have to give the trade room to breathe, or room to move. And as you can see here, we already entered the trade on this candle. Let's make it a bit bigger. We already entered at this green candle. The next candle was red. Then you can see we move back in just under the trend line, but we close above, so nothing to worry about. And then we move on. We keep we keep having price action around our entry, and eventually you'll see price taking off and hitting, in this case, take profit. So this is a good example of a breakout with volume, the retest on the trend line. So if I draw a path here, so we start here, and this is the breakout move, and you have the retest of the trend line, and then you have the continuation up until take profit. Let's see if I can find a quick example of an deviation. Reason why I tell you guys to wait before entering a trade on the you enter a trade on the third candle, because sometimes you'll see that you have a breakout or a breakdown candle, but then it will deviate, so it will move back. The second candle will move back in or under the trend line or above the trend line. Let's see if I can find a quick Mm. Not very well, not very subtle, but if I draw it like this, you will probably see what I mean. Let's have this one. This is not a really good trend line, but it's just like for an example. Let's say this trend line was a good trend line, so it was 1.2 point, and this wasn't here too. Well, maybe these two are both deviations. As you can see here, you have a breakout candle, but there's no volume. So you can enter here, and there are people who trade breakouts. So who enter once a candle breaks out, but then it has to have volume too. But I always wait for the third candle, because like you see here, the first one broke out, closed above, but the second candle closed back in or under the trend line or in the pattern, whatever it is you have drawn. So as you can see, if I didn't wait for the second candle to close and I would have put a long in here, it would have definitely touched my stop loss or hit my stop loss. So it's also the case if you draw the same trend line, but then on the lower wicks. Also here you have a big deviation candle. So you see here a big dump. Well, and if you have a dump like this, I would suggest not waiting for a trend line, because this says there's a lot of down volume like you see here. But then the second candle up, straight back up. So that's why I always say wait at least for the confirmation candle to close. So the second candle after the breakout, the candle after the breakout, wait for that candle to confirm the breakout. So one candle breaks out, second candle closes above or below. If you are looking for a breakdown, then try to enter at a retest. And like I said, sometimes it doesn't work out in the case, and it will it doesn't hit your entry, but also this is not 100% win strategy. So there will also be times that on the higher time frame it is still deviation, and before the move up or move back down, and you close below. And I would usually let's say I'm in a long here. Invalidation would mean a close back below the trend line, the same way as I going long. So a confirmation of a breakdown candle here, a confirmation candle below, that would be a sign to close a trade. So yeah, that was in short breakout trading and breakdown trading. I had somewhere the sheet, but can't find it again. So let's see where it is. There it is. So to recap, breakout and breakdown strategy used to enter on a confirmed breakout or a breakdown of a trend line on the retest of that set trend line, which could also be a pattern. And you will use those trend lines. You would use a confirmed breakout or breakdown, like I told you guys. First candle is the breakout or the breakdown candle. The second candle is the confirmation candle. If it closes below in case of a breakdown, or above in the case of a breakout above the trend line. And then after the close of that second candle, then you put on, then you're going to put on your trade, or you're going to look for your entry, stop loss, and eventually you take profit. Use the EMA 15 and 50 and 100, and also the RSI and volume. Use those for confluence. So best case scenario, you have an RSI crossing bullish when you have a breakout, and you have an RSI crossing bearish. So in my case, black crossing down, which is bearish, black crossing up, which is bullish on the RSI, and you have a volume confirmation on the breakout, because if you have a breakout with volume, it means there are a lot of people or buying or selling, so it could signal more downside and more upsides. So yeah, that's everything I had to tell about the strategy. I'm not sure if there are any questions. If you have any questions, you can have the time to put them in the voice chat. I see there was a question, but that was already answered. Like that, Kieran says, I only use this on the 15-minute time frame because I like just being at the charts and watching the charts while trading at this style. So it's more like a scalp strategy, you can say, even though scalping is even on lower time frames, 1, 5, 10 minutes. So 15 minutes gives me room, gives me setup time, so I can put on the notifications and go do my things and just wait for a notification. And when it comes, go on the charts and watch to see if it's a possible breakout or not. So it gives me half an hour from notification until a possible confirmation of the breakout or breakdown. So there, in that way, there's not always haste, but if I'm at the charts, I can keep an eye out. So. Well, usually, Aaron, thanks for your question. If it's not effective below the 15-minute time frame, I found it to be not as effective because the lower the time frame, the less reliable TA is in general. So you have to move quick. So I'm not sure. I never really used it below the 15 minutes. So you could give it a try, but then make sure you have your risk in check, or just try without really putting trades on, but just look at lower time frame charts and put long positions on if you see a breakout or a breakdown, and see if that eventually catches up. So the general rule is that technical analysis and indicators are less reliable on lower time frames. So even 15 minutes is quite low. That's one of the reasons I changed the challenge time frame from 15 minutes to 1 hour, 2 hours. I did use the breakout and breakdown strategy for a while on the 180 day challenge, but you have to be quick, so it gives you more room to play. Yeah, it's good to play it safe for now. Just learn, and once you get comfortable, follow signals for now. And if you get comfortable enough, go try the trade on your own. But you can use TradingView just to test out your own strategy. How many strategies are in general? Are you talking about me? Well, I did. Yeah, it's just how do you say it? It's a long-term plan, and you start with looking for what fits your style or fits your strategy. And I really started from the beginning with trading trend lines, and then you go to change some things if you find out, well, this doesn't work, this works, this doesn't. So like now I'm evolving my higher time frame strategy and adding FVG, fair value gaps, because I like that and they seem to work for me. So it's an ongoing process. But when I first started out, I was just I wasn't following any rules. I was just saying, this looks good. Here's a trend line. Here's support and resistance line. So in the beginning, I wasn't really into rules or sticking to rules. Which, if you don't do that, you will eventually get humbled by the market. So I had to change that, and then you start with, with all the knowledge I have, with everything I read, with all the things I learned so far, what fits me as a trader. And I think that's the main part. You have to look for a strategy that fits your needs. Some people want to be at the charts constantly. They want to scalp constantly. So you have to find a strategy that fits that need, that you're constantly on the chart. If you are that kind of trader, there are also traders, they only trade higher time frames and maybe are at a chart 15 minutes or 30 minutes a day, putting out charts for the rest of the week, putting on trades and just wait for them to play out. So it really depends also on what kind of person you are, what kind of time you have. I tend to be busy at the moment, still working and having kids and family. So this strategy gives me also room to do other things. And I have like a half an hour in the morning scanning charts and looking for trend lines or patterns which can break out during the day. Set a notification and then go do my thing and just wait. So I did have to learn that. I did have to learn not to be constantly monitoring trades. Or is it already at the trend line? Is it going to break out or not? No, just set your notification, and once it breaks out or break down, I'll hear my telephone. I get a notification, and then that's a point to look at the chart. So I hope that answers your question, Bart. If there aren't any questions left, I would say this was the breakout and breakdown strategy for this week. For anybody who is interested, I did make a record of this, so I will put this on YouTube later on. For now, I want to thank you guys for attending and for your questions, and also for being here with me today. So we'll talk later, and thank you guys.